We are live for the Friday edition of the Mike and Mario Show. Excited to be back. It's been a while, but here we are. And what a heck of a week, Mario. How you doing, my friend?
Yeah, I'm doing well. Heck of a last month or so, it seems. Everything is unraveling in the government bond markets. I think it started probably in the UK, and we're not out of the woods yet, and it looks like it's affecting all the Western government bond markets. The what they call liquidity in the market, which means how easy it is to buy and sell at a very tight bid and offer spread and big amount. It doesn't look like we have that, not even in the Treasury market. And Janet Yellen even mentioned that a few days ago, that she's concerned about it. And why is that so important? Well, because the government bond markets underpin all the currencies in the fiat currency system.
So beyond what's happening in UK, we have what's happening in Japan. It's just records and abnormal events happening all around the world in reference to the whole debt markets and things of that nature. So we're going to touch on that as well as a couple other subjects. So welcome to everybody. Hope everyone's doing well. Definitely throw out some thoughts, ideas, suggestions, things you guys want to have us touch on during this live stream here. And let's just start off. We'll just work our way through talking about debt right on into the financial markets and everything in between, and see where it takes us. So let's just put this on the screen. So this is something you sent me, which is showing more of the lack of liquidity in the debt market. But here, just focus on U.S., Germany, Italy, and the U.K., and everything is trending upwards. Shine some light on this for us.
Yeah, as I said earlier, that's the difference between the bid and offer, and the wider that is, the less willing investors are to buy or sell, because they feel like they're getting ripped off. And the other reason why the people who make the markets in this, they're called market makers, usually bond dealers from the big banks or Wall Street firms or City of London firms. The reason they're not making tight markets is because the market is very volatile. And why? Well, because they've grown so much. The governments have borrowed so much, so they have to issue all these bonds. And so we've gone, I think, 9 trillion more in debt in the last few years in the US. We're at 31 trillion. In the UK, we're almost at 3 trillion in national debt. So the market can't handle that. Why could it handle up until recently? Well, because the central banks were all keeping rates low. They're all doing QE, and QE, of course, is going into these markets and buying the bonds. So now the primary dealers, the people who make the markets in these bonds, they're saying, wow, central banks are selling this, and we don't want to be holding this rubbish, because basically it's rubbish. You'd never have a problem of liquidity in the gold or silver market, because they've been solid money for thousands of years. But government bonds, they're not risk-free, and that's what it's telling us. And it almost collapsed the banking system. Well, they say it was the pension system, but ultimately it would have been the banking system here in the UK, unless the Bank of England had stepped in and printed more funny money to buy this stuff. And eventually people are going to realize this is not real, and then everything is going to implode.
Yeah, speaking of which, you sent me this little 1-minute clip from Kathy Woods, and how she was mentioning how not only the pension systems, as you was mentioning, was at stake here, but the entire banking system, because all those intermediaries in between who took on all those liabilities there. So
that would be good if we could listen to that for the viewers. I think it's not.
You want to try to play it?
Yeah.
Okay,
Can you click on it?
Yeah, I can. Let me because I could have downloaded it first, but I'll play it. And so stick around and let's listen to this one.
I heard someone say the other day, and we were talking about this LDI crisis in the UK, that the reason it's so serious is pension fund sponsors were beginning to think, and banks were beginning to think, that interest rates would stay very low for a very long time, for as far as the eye could see. And that assumption was built into the kind of derivative activity they were doing. No one expected a sharp increase in interest rates. Well, once that happened, pensions began getting margin calls, and they couldn't meet them. And in fact, if interest rates had gone to 8%, and I think they got to 6% over there, if they got to 8%, then according to some of the people close to that situation, whom we have consulted, then the pension system would have collapsed. But it wouldn't really have been the pension system. What really would have collapsed if the pension funds were not meeting those margin calls were the banks, the counterpart.
The banks.
Yeah, there you go. So the Bank of England has again bailed out the banks.
Mm-hmm. And so she mentioned about margin calls. Like nobody anticipated rates going up. Like, were rates supposed to stay low forever?
Oh, yeah, that's right.
We're living in a basically a ZERP environment for the last 10 years. At some point, it had to be reversal.
Yeah, I'll give you an example. The 10-year gilt yield, the UK government bond yield, was around 1% at the beginning of this year. And during this crisis, it got up to like 475, and right now it's still around 430. So that's a huge move higher. And I think in 2020 it bottomed below 1%. And not just the City of London, the pension system, but also people in general. They took on a lot of mortgages in 2021, and their thinking, like Kathy Wood said, is that they never thought interest rates could go up so quickly.
Right.
So, and I don't think we are out of the woods yet, unfortunately. And we've had 40 years of always declining interest rates since 1980 or 81, where the 10-year yield topped above 15%. But now I think it's turning. And you'd think, the turn is going to be smooth over the next 40 years. But it looks like what we're having is we're unwinding that 40-year bull market in a matter of months.
Yeah.
And I think that's the problem. And why is that? Well, because there's so much leverage, because in the last 40 years, especially 20 years, everyone's had to use so much leverage because rates keep going lower. And in order to get a return, they have to
take on risk.
Yeah, and that's why they got margin calls, because they couldn't think that interest rates would move up so quickly.
Yeah. And so speaking of which, I was thinking about, I shared an article the other day about the UK pension situation rather. And so here's just a headline from yesterday. It says UK pension fund selling stokes fear across bond markets. And so as of right now, I think, ground zero for this global contagion could actually be within the UK, because today, the 14th, they're supposed to basically stop supporting this bond market or the pension funds rather. So do you think with all these margin calls that they're going to have to sell off assets of some kind? Then what? How will the unwind continue to escalate, do you think? Or will they be forced to come in at some point to try to really save things if it gets out of hand, or what? Or do they even give a damn at this point?
Yeah, basically the mainstream thinking is that it was Kwarteng, who's now the ex-chancellor. He was sacked today. His mini budget is what triggered this. I beg to differ. This has been brewing for a long time. Interest rates were rising even before his mini budget. It's just a debt problem and the fact that we're getting rising interest rates. So right now, the Bank of England, I think today is the last day that they're going to help out with their up to 65 billion pounds of QE. They stepped on the pedal, so to speak, in the last few days.
But watch it. We're sorry to cut you off, but they didn't get anywhere near the 65.
No, they didn't. They didn't, because their argument was that they didn't want to make it seem that they're doing QE again. But on Wednesday, they had to use quite a bit, almost 5 billion. And they on Monday or Tuesday, for example, they only used 800 million. So the hope now is that with a new chancellor and reversing the mini budget, things will calm down and that the Bank of England will be able to step away and start. Well, the Bank of England is supposed to do quantitative tightening, which is the opposite of
right.
And they promised that in the beginning of August already, and they haven't done, a penny of QT. Yeah, that's the hope, that everything will calm down. But I have a feeling it won't.
But what about the budget situation? Because inflation is still of concern there, and the energy crises you guys are experiencing. So they're still going to have to figure out the budget aspect. How are they going to support?
Yeah, the thing is, the budget, the mini budget, they planned for like 50 billion with tax cuts. And that's what apparently the markets didn't like. They're going to reverse that and a few other things. But no one's mentioning that a few weeks before the mini budget, they passed the energy price cap package, which was like 150 billion pounds. And no one's talking about the fact that Rishi Sunak, who was the old chancellor during the pandemic, he spent like 500 billion just during that pandemic and created all that debt through QE. So why is 45 billion that bad? So that's why I don't think it's going to be solved, because it's got nothing to do with this mini budget. It's all to do with a much bigger problem. It's this fiat currency system is unraveling. And I think that first chart you showed about the bond market, world bond market illiquidity, Western bond markets, that's the whole problem. That's the whole problem. And I'm afraid the Bank of England is probably going to be back on the QE trail very soon.
Yeah. Now you guys are going through finance ministers, right over there. So it definitely has to show the lack of credibility as well as just confidence amongst Brits there, just to realize that they don't have an answer for the problems. Therefore, there is no real solution. And of course, as you mentioned before, they'll never, lessen the size of government, cut back spending, and just embrace the pain that's necessary, because there's no correcting what has been basically a systemic buildup for decades now. And so there has to be a day of reckoning. But they don't want, it seems like they're trying to prolong it or appear as if they're able to maintain things, but they're caught in the midst right now because they can't fight anything because they are the problem themselves. So hopefully more Brits, of course, are getting their weight up, because that will be the ultimate form of capital and relief to protect yourself from these central banker criminals out here.
I actually got something the other day. I didn't send it to you, but it's on my phone here on WhatsApp. Someone who I met this year when I went to Italy sent me a, where is it?
And while we're waiting on that, for those who throw out some thoughts, ideas in the comment section, and we'll jump on those in a moment.
Oh yeah, I think I can find the article. It's UK's Royal Mint lifted by markets turmoil as demand for gold surges. So this is from the what day is this from? From yesterday. Record profits at 1,100-year-old company. So the Royal Mint is 1,100 years old, driven entirely by its consumer business, offsetting decline in the use of coins. So people are buying gold like crazy in the UK because they realize that there's something wrong going on. Let's see if I can find that article.
Yeah, I found it on FT. This one here.
Oh yeah. So the British people are, they're waking up, hopefully.
Yeah. And before we went live, you mentioned how in all these nations where the debt markets are imploding, currencies are being devalued heavily, gold is actually serving as a form of protection, because in nominal terms, in other currencies, gold is getting a fair bid up, whereas here in the West, in the U.S., you were saying that, a lot of Americans might be a little discouraged because it's not moving, but yet it is serving its purpose for other nations that are experiencing problems. And so, as you mentioned, the Japanese yen in gold terms is trending up.
Yeah, it's almost at all-time high in Japanese yen, around 250,000 yen per ounce.
So the moral of the story is you won't really be able to see the full benefit of your wise, your wisdom of being able to save and invest in real money until stuff hits the fan. And the UK is a good example. Bank of Japan, all the other nations we've been talking about forever. Those are nations where those people who were able to protect themselves ahead of time, I'm sure they're very appreciative that they have weight in their possession rather than waiting to scramble when things hit the fan. So just be patient, people. and my Westerners, por say, here in the U.S., because I guess because everything is priced in the USD here, people are like the dollar is going to be, king honcho forever, and gold and silver, they can always suppress that. I'm like, okay, that's cool, but once again, we all know where it always ends up back at is, the truth will be revealed at some point. So anyway, enough of me ranting. Okay, let's move along. We got a couple more topics here. I'm sure we want to touch on. What else we want to do? What do you want to swing it to next?
What could we swing? What have you got there?
Let me see here. I'm gonna put you on the spot. So yeah, we got we'll open the airways in a minute, but here is the
the Bank of Japan, like how they've killed the JGB market. Or okay, we'll go to we'll do that. Yeah.
So okay, so this is once again, I'm assuming as a former bond guy yourself, have you ever imagined a day where there'll be 4 days of no bidding for the 10-year?
Yeah, actually, I remember I worked in the markets till 2012, and we used to hear that already about the JGB market because it was already very illiquid. So they own, I think, 70% of the bond market, the Japanese, and and it's, if you read that, the 30-year yield though is at over 1%. So they have something about the 10-year because it's more important for consumers. It's just a crazy, Kuroda, this head of the Bank of Japan, he's going to be known as a crazy person, eventually in history. They're going to say the guy was a madman, irrational, and that's unfortunate. But we can move on to your other story. Is that the Michigan?
Yeah, let me grab that one again. Where'd it go? I lost it. I got so many articles up here. Okay, so expectations. Here we go here. University of Michigan inflation expectation unexpectedly jumped in October.
They like to always say unexpectedly.
Right.
It's unfortunate it's coming from Zero Hedge. You'd think they
right. I was going through here just looking at some of the graphs, and I think it's either this one or another one, but I highlighted a few things here. Yep, it went away. But just showing how the home buying conditions is plunging. We got confidence in the Federal Reserve amongst Democrats, Republicans is plunging, and all these other things here. It's just amazing how, people are, very concerned, and they're not willing to continue to basically pay astronomical prices for things that, they expect in the future at some point have to come down. So it's just amazing to see how.
I think I think Jamie Dimon, he was at this Institute of International Finance in Washington, D.C. This is where all these people who went to the IMF and World Bank meeting went. Yeah. And I think he spoke yesterday and he said, I have complete confidence in Jay Powell. So, but one thing I agreed with him, actually, one time I agree with Jamie Dimon, is he said that the U.S. should start drilling for its own oil and gas and stop begging the Saudis and Venezuela for its oil. I agreed with that on him, but I don't agree with him on having confidence in Jay Powell.
Yeah, and speaking of which, that is another one that I wanted to touch on. What are your thoughts on the OPEC?
I think it was OPEC, yeah.
Earlier this week, decided to cut back at some point 2 million barrels a day, under 2 million barrels a day. So, and the White House is not too pleased with that. And my thought was, okay, will this be the end of the petrodollar agreement officially, just because this will decouple, the West from the Eastern agenda? Now that Saudi Arabia apparently is, pivoting towards the East because of all these deals they put in place. So what do you think?
Well, I think the petrodollar is already getting hit hard over the last few years. I had the same thought as well because this was OPEC plus. Russia was involved as well.
Yeah.
And but I read an article and the Saudi minister said, we don't want to abandon our deals with the U.S., and I think, this has happened a lot in the past. The U.S. has always had a problem with OPEC, but because they feel it's part of the deal that U.S. provides security for the kingdom, and that the Saudis provide oil at a good rate, and also reinvest the oil revenues in dollars. But it is probably another reason why the petrodollar doesn't have long to go. And now I heard Biden say that when Congress comes back after the midterms, the new Congress, that they are looking to maybe pass this. They've tried it before. They talked about it's called NOPEC. It's basically a bill in Congress to punish or bring legal action against OPEC, which would be quite big. I mean, that might actually push the Saudis to say, we don't want to deal with you anymore, and we're going to deal with other countries and other currencies, because if you're going to punish us legally through your Congress, what's the point? So that would be interesting. And I heard someone say that the Americans are trying to get the Saudis to delay this oil cut to November 8th.
Right. And that's where, like, apparently a letter was leaked. I'm not sure how, what, where, when, but there was a letter from Saudi Arabia, from the kingdom, saying how basically the Biden administration had tried to encourage them to hold off on any type of, oil situations until after that. And I saw a lot of people saying that that's in cause for impeachment. You know what I'm saying? Like, he's like literally trying to sway geopolitical events for their own elections, whatever. I'm like, good luck with that.
I think whatever happens in the next few weeks in terms of oil election, oil price or the oil market, I think is going to be next year. They're going to have to refill the strategic midterm reserves.
Yeah.
I think someone called it the strategic midterm reserves. And that's going to put a rocket up the oil price again.
Yeah. And speaking of which, we'll transition on. We'll get into some questions. But, Saudi Arabia is caught dead in the middle right now, literally, between the Western and the Eastern agenda. And it's inevitable that they pivot east, just because for the last, 50 years of having this petrodollar system, they've lived quite well, to say the least. But then again, as the world transitions towards another monetary structure, you don't want to be the last one holding government securities just because they're not risk-free these days.
I noticed they're starting a lot of projects in Saudi Arabia that are going to cost trillions because they want to spend those dollars, I think.
Right.
So you heard of that, the Neon City? It's like a line city in the desert.
Oh, it's like,
and there's some other projects there as well. I'm not saying they're great, but very ambitious. They want to get rid of those dollars and do something with it. That's what it seems to me.
Right. They want to put them to use while they still can. And I think it's a lot we can learn from that, because they have stockpiled as a part of their reserves U.S. liabilities forever, and they're trying to get rid of them. And so here on this side, because we use dollars to provide and take care of ourselves, the question is how much of your net worth do you still want liquid in dollar terms in the future when things really hit the fan? Just because you got to figure out it's a fine line to balance out how much you want to hold, how much you want to have in metals and other things. So
that's up to each individual. I've always said that it's up. Everyone has different circumstances.
Right. 100%. All right. So let's open up the thoughts and get some questions out here. We got a couple more articles, but I want to get some thoughts from out there. So feel free to ask some questions. And I know, Mario, you're dealing with your nasal situation here, so don't want to go too long. But so feel free to throw some thoughts, ideas, suggestions on things you want to touch on, and we'll.
How is ESG in Saudi Arabia? I don't know, but that's environment, societal, and governance. But even Jamie Dimon yesterday apparently said ESG. No, the markets don't believe in ESG. He even the bankers are waking up to the fact that it's kind of rubbish, even though it's one of the reasons why JP Morgan froze or closed Kanye West's account. Have you heard about that? Yeah, they closed his account because he.
Oh yeah. I'm sorry.
He supposedly made some comments that were not politically correct, and J.P. Morgan, even though Jamie Dimon poo-pooed ESG, J.P. Morgan is following this ESG, and the woke politically correct part of ESG is the S, the societal.
The wall. So speaking of which, while you were explaining that, I did find something. I typed in ESG. It says Saudi Arabia issues ESG disclosure guidelines for a listed company. So this was as of last year, and so I'm not sure if it's changed or they ramped it up, but apparently they have bought into it or were planning on buying into it.
Low blood pressure says ESG working well in Sri Lanka.
Yeah.
Good point. Low blood pressure.
And on another story, let me see here. There's a couple states here. So I want to say Texas and Louisiana both mentioned about removing some of their funds from, I think it was BlackRock, because of the whole ESG. It doesn't line up with their future financial goals. And so they're saying that they're going to start pulling their accounts from BlackRock and entities that support ESG. So that's
because
another good little pushback.
I guess Texas, Louisiana depend a lot on the hydrocarbon industry.
100%. All right, what else we got out there? Feel free to throw out some thoughts, ideas, suggestions, or questions.
Growth Steiner says dump U.S. trash dollars. I agree. Dump also pounds, dump euros, everything. All fiat currencies are bankers' currencies. And if we hold too much of it, I know you have to hold some, of course, for expenses and stuff, but try to hold as little as possible, because all you're doing is you're financing these people.
Yeah. Keeping them in business, man. Keeping them in business. What else we got out here? Let's look at, because we have not done that. Let's look at right now. There's a little bit of a downward trajectory in USD terms, but as I mentioned before, pay no real attention to it. But it's just interesting to see how right now it looks like markets across the board are trending downwards, and so they always manage to make that look like a unified sell-off.
And I noticed yesterday after the CPI number, all the markets got hit, gold, stocks, and then the stock market rebounded and went up, but gold and silver didn't go up. It's like, heads, we win, tails, we win too.
Right. One thing, I was looking at this the other day, just looking at how this is just the last 30 days in silver in particular. And beginning of this month, we had that spike up to 21, and it just had a much different feel in the metals community as that, something was breaking. I heard a lot of people talking about, silver shortage. And of course, Andy Sheckman is, sharing his concern over just lack of, the supply that he usually gets is on hold and stuff. I'm thinking like, wow, like, I wonder how much of this is bullion dealers just trying to steer business their way by preaching scarcity, or is there, in actuality, are they really having issues being able to obtain things they want, or what? What do you think?
I think there's a big premium out there, especially for silver eagles, and in the UK as well.
Yeah,
the shortages, and I think what they're trying to do here in the paper market is to stop the public buying physical gold, but it's not doing that, and it is frustrating to see that. But that's the only way to try to stop people from buying the real thing, is to manipulate the price to make people say, oh, I shouldn't buy this, it's not doing anything. Because can you imagine if gold and silver were doing what they should be doing, even in dollars? The COMEX and all the ETFs would be drained of all their metals already, because they're already being Rafi Faber talked the other day with Chris Marcus from Arcadia. We never had this drainage of silver, seen that before. So something is going on.
So Alex says supply is low, but 19,000 contracts are asked for delivery. I wonder who's buying it, Russia, China, or India.
Maybe it's not a particular country, but maybe people who see that you can buy it really cheap on COMEX, take delivery and then make like an easy, guaranteed profit because of the premiums.
Yeah, here's a great question here from Chris. Appreciate you, man. It says, can you please explain yield curve control? Is it inflationary? What effect will it have on precious metals? Thanks.
Yeah.
Yield curve control.
Do you want me to go over that?
Go ahead. That's your expertise.
Basically, yield curve control is what the Bank of Japan is doing with the 10-year JGB. They've said we're not going to allow the 10-year JGB yield to go above 0.25%. And what they say is, well, we will buy as many JGBs as we need to keep that yield at that level. So it's not really QE, but is the threat to the markets saying, we're not going to allow this rate to go above this. Yeah, it is inflationary, of course, and it's market manipulation. And it's like if the U.S. Treasury came out and said, or the Fed, sorry, we're not going to allow the 10-year yield to go above 4%. So I think right now it's just above 4%, isn't it? It's
401.
401. So the Fed would come in and they would buy as many billions of those 10 years necessary to bring it down below 4%. That's what yield curve control is. And I think they did that during World War II up until just before 1950 to finance the war. So it is inflationary, I would say, because they're going to be creating more currency and they're going to keep corporations and bond markets because if they keep yields low in the Treasury market, yields are going to come down in the corporate bond market, mortgages as well, and people are going to spend more. So because they're going to get cheaper financing.
Now, speaking of which, before we went live, I was talking about how I think months ago you mentioned that somebody asked you about a breaking point. Can you see a breaking point in the debt market? And you said that 4% and the 10-year would be a moment to really consider. So here we are today at 4%, and definitely there's going to be ramifications or a ripple effect throughout the entire debt market for this. And so is this a sign of something that things are really escalating in the debt market, or what?
I think so, because if you remember well, it was the 23rd of September. That was a Friday. It was, the autumn or fall equinox, and the pound started unraveling, and the gilt yields are going up. And then the next Monday, the pound fell to almost 1-to-1. And we could come in next week and see the 10-year yield continue to move higher, and that will. I think that's one of the reasons why we're seeing the stock market back down today. But I know it hasn't fallen as much as it went up yesterday, but it could. It's definitely a problem, and I think it's going to exacerbate the liquidity problem that Janet Yellen mentioned 2 days ago, and the day before she said, I don't have any concerns about the financial system. And then the day after she said, I do actually. Liquidity in the Treasury market is really bad. And I think that's what it will do. So keep an eye on that 4%.
So here we got the yesterday sell off, and then close, and now we're trending back down. So just look at the seesaw ride, and I imagine the nerves and jitters in a lot of people's stomach, man, when they're watching, especially the people who probably log onto their accounts and they see just red green. It's like
the best thing is to put it away and not look at it when it's like that.
Stay away from it. And speaking of which, let me see that. There's another headline I wanted to definitely share. Let me see if I can find it. It talks about, let me see. Can I find it? Let me know if you see any or comments out in the chat. Feel free to throw
Pagan Warrior. Can you see
Don Diamond?
Don Diamond.
Ever go to prison?
No, I actually think Don Diamond, there's a better chance of him becoming president. Not that I like him, than him going to jail. He actually said that Biden and Trump have no clue that they're not good diplomatic wise for America. They need someone more diplomatic. I thought that was interesting. I mean, I think Trump, of course, was better than Biden, but yeah, Biden is a loose cannon.
Yeah. I was trying to find an article, but I can't find it, but I did see a little visual aid here just to show you, highlight some of as the investment narrative changes. Here we have, let me share this with you. This is the 60-40 portfolio, worst year-to-date return in the past 100 years. And
wow.
This was coming out from Bank of America and shared by Ben Johnson. But that just plays into just a narrative, man, of like just buy and hold and just trust that everything will be all right, because the markets, they always, on the long run, they always trend upwards. Okay, yeah, sure. But in the midst of a reset, I'm not quite sure we can count upon that, because
this is a huge haircut, especially for people who just started investing, I guess, 2-3 years, and to have this happen to their portfolio. Maybe for people who have been doing it for decades, yes, it will affect it, but it won't be too bad. That's why I always look at investment as, you gotta invest in yourself first and your family.
Yeah.
And maybe if you are going to invest in other things, invest in something that you know about and that you believe in, so you can hold on to it while you get these kinds of drawdowns. But yeah, the bond, the 60-40, yeah, because usually when you have a bear market in bonds, or you've had in the last 20-30 years, if you've had a bear market in stocks, bonds usually do really well.
Right.
But this year,
it's like,
they're all, even government bonds haven't done well. So that's why it's so
right. And that's the like, because of inflationary numbers, neither one of them have been great. And not to say even a hedge against inflation, but they haven't even outperformed inflation that whatsoever. So you're still losing. Now it's more so like, what are you willing to lose less the fastest in, like, type of thing?
No, I mean, unfortunately, even for Americans, even gold and silver haven't a hedge this year against inflation, even though if you look back, over the last 20 years, they have been good hedges against inflation. But I think, as we said, we need to be patient.
Right, 100%. Here's a question here about Jeremy Hunt. Jeremy Hunt will be a disaster. What do you think of the rumors about Sunak and Murdoch being at no 10, 11? At no 10, 11.
Oh, yeah. Well,
I don't know what that is.
Yeah, well, Jeremy Hunt, he used to be the health secretary some years ago, and he didn't do a good job. He was very draconian during lockdowns, and now he's the chancellor of the exchequer. He's just going to be a puppet for the Bank of England and the bankers in terms of being the chancellor. The other comment, that the rest of the comment, is that there are rumors that they want to replace even Truss. They want to get rid of her.
Wow.
And put those two people at number 10 and number 11. Number 10 is where the Prime Minister lives. Number 11 is where the Chancellor lives. It's in Downing Street.
Yeah.
So they're neighbors.
Now, let me ask you a question. So I've never been to that region there. So, like, can you literally walk down the street?
Well, you used to be able to walk into Downing Street, but now they have a gate.
Okay, I was always wondering. I see.
But you can look through the gate. I've never really gone. I don't really care to go there and have a look. But you can go on Google Map and have a look at it. Downing Street.
Here's the video you sent me about Hunt and his praise of the whole health experience done by China there, and how.
Yeah. Well, he's married to a Chinese woman as well.
Yeah. And he was low-key praising China in their response. And he's like, well, we don't need to go that far, but, something like that would definitely help. I'm like, oh, okay. Something like that. So, yeah, anyway, keep it going. What else we got here? Here is George says, gold and silver will have their day. Been waiting since 1980. Is 42 years long enough, or maybe 84 years? Long as you got it, you're better than the average person, man.
Here, for me in the UK, it's done a very good job since 2002. But it is frustrating, I have to say. Even when I started out in 2002, it started going up in dollars, but then the pound was strong, and I said, well, it's doing nothing. But eventually in 05, 06, 07, with the crisis, it really took off.
Yeah. Here's a question here from Roberts, because it says, so if everyone gets a haircut, can that be deflationary? Yeah.
Yeah. Well, if you cut the money supply, but it doesn't look like they want haircuts, because, when push comes to shove, as we saw recently, the Bank of, they will intervene like the Bank of England did to keep things going.
Yeah. It's the same thing, inflate or die, or deflate and die. Which, pick your poison. Like, either way it goes, there's going to be a day of reckoning. Just because
if they deflate and die, there's going to be loads of bankruptcies. Loads of banks are going to go under, like we saw Kathy Wood saying that the UK banks. So if you had money in the bank, you'd be, in trouble. Or they inflate, and then the money becomes worthless. And then in either case, you want to have some metals, and I say gold metal, have some metals, not because I think it's a trade, but because it will maintain your, it will help you maintain
its liquidity,
fairly good standard of living. You won't become poor.
Correct. And I think at the end of the day, I think it will be the best form of capital that a person can have outside of all the contagion of digital paper illusions that we've been bombarded with, and we've mistaken them as being assets because we were told that, like, buy government debt and hold it. It's going to always yield.
Safe haven.
Right. Man. And speaking of which, I know a lot of this, well before now, we were talking about this last year, I think, the whole Basel III. And with the banks scrambling to make, gold tier 1 capital assets that banks can have on their balance sheet, real physical gold, like the banks have an insurance hedge against the debt, the losses that they're going to take with the gold they have in their possession. And then central banks around the world have been running towards gold as well. So they even know that they're going to need something to shore up confidence when things is needed to be rebooted. So just,
be your own central banker is the old saying, isn't it?
Right. Let me see. So someone says, Mark says, will inflation destroy the Fed? It's going to, no, because they're still in position, I think, in working in cahoots with the government, to where that's why I think they're wanting that CBDC stuff to be the next medium of exchange that they have control over. So I don't think it's going to destroy them outright. It'll just reshuffle some things, but our governments will never be able to do the right thing and alleviate central banking.
Well,
so anyway,
there's a good chance, though, that it could, because we were talking before we came on air that apparently there's some people who've done some research of central banking and economics in the last 300 years, and that it takes at least 7 years to bring inflation down from 8 to 2%.
Yeah.
So we could have a whole decade still up until 2030 of high inflation, and it could hurt the Fed, not just its balance sheet, but also its credibility and its popularity, because the Fed is a political institution created by an act of Congress.
Yeah. Well, okay. So I no doubt agree with that. But then think about on the flip side of that, as the economies deteriorate and people lose everything, financially speaking, denominated in those Federal Reserve notes, how much easier and how much more of a stronger stance they might have if they try to come out with the next form of medium of exchange, this legal tender that people have to accept in order to try to get the bare minimum essentials for life. Like, it'll hurt, it'll suck. A small amount of us will say, no CBDCs, I'm going to stay away from them. Why? Because I have gold and silver, I have crypto, whatever. I don't need it. But then again, your average Joe who don't have anything, they be like, sign me up. And that's the bad part where, so it's a give or take, but we'll see. Hope it don't work, but I would hold my breath. How much precious metals can you travel with? Can you travel internationally with?
Oh, I'll answer that.
Yeah.
I mean, I don't know exactly, but I went to Portugal, to Madeira, 10 days ago or so, a couple of weeks ago, and I took 3 little coins with me, like quarter-ounce coins of gold, and I put it in my pocket with all my other change. So, and when you go through security at airports, they don't even know. So it depends. You have to, but if I took like 100 sovereigns in my pocket, yeah, then maybe, yeah, but you can take a few. And I found a place in Madeira where they buy and sell gold. I also found a local coin shop there. So yes, some people say, "Oh, you can't travel your gold." You can. You just got to use your head, because most people haven't ever seen a gold coin. So if you put what I recommend is the ones that aren't as shiny, not the 24 karat ones, the 22 or the 90% coins, because they look a bit coppery. So you put that together with all your other change, and they won't even know when you put it in that box, through security.
Yeah, the security,
that it's gold.
Yeah, and so that's so you can get away with it.
Yeah, I don't know how many you could take quite a few, but
I mean, so you're not supposed to have more than 10,000, or you have to declare it.
Oh, that's in the U.S.
Yeah, in the
I
U.S.
don't think we don't have any rules here in the U.K.
Really? Okay, that's different. Or
not that I know of.
Yeah. So yeah, it basically it depends on what jurisdiction you're in. Because here,
you could take $5,000 in little pre-1933, let's say $5 half eagles, things like that.
Yeah. All right. What else we got here? What about face value for market value? Pablo Pina. We're not sure what we're talking about there. Alex says, question, if banks are forced to hold large cash reserves, it will help with reduce the currency in circulation, thus pushing prices down. If large cash reserves, yeah. So to my knowledge, they don't have to have any capital, cash reserves.
I think Alex is talking. Were you listening, Alex, to Greg Manarino? I think he said that one way to stop inflation would be to force banks to hold more cash, to make less loans. And I agree with him, but that would have the same impact as raising rates, and that would put the economy in a recession as well. So yeah, what Greg Manarino said was right, but the other way to do that, to make banks hold more cash, is to raise interest rates through the roof, because they're going to keep they're not going to lend money to the public if the Fed's paying them 10%. So yeah, that's a way to do it. I'm not sure what Greg was thinking there, but I agree that they could, because right now the banks don't have to hold much reserves. So the Fed said, oh, you need to keep like 20% in reserves. That would really stop the economy. But it would also create a recession and stop inflation.
What else you got here? Floyd Mayweather. Let's see. We'll go up with these two. Let me see. No more questions. I think, we're about 50 minutes. Let's already dial back. All right, people. Well, as always, it was great to connect. Mario, excited to have you back, man. To have you back home. Good to connect with you as well. Hope you feel better as well.
Thank you.
Weather's changing, everything in between. We're going to be thrown with all types of craziness. We got less than 50 days of 2022-ish. So it's going to be interesting to say the least. But continue to take advantage of opportunities as they present themselves, man. Build your skills, get out of debt as best you can, get your weight up, calories up, ammo up, everything up that you need. And I'm trying to work on smiling more. I pay too much attention to all these stories in the mainstream news where I've allowed it to steal a little bit of my joy. So I want to take back what's rightfully mine and smile more and look for more positive things in life rather than just, the doom and gloom stuff. So that's just on my side, a little bit of a rant. Anyway, any good news you want to leave us with before we sign off, or any thoughts of wisdom?
Well, no, just Nothing really today. Just, I guess, just try to avoid all the noise out there and keep it real, as you say.
Yeah,
because there's so much going on out there.
that's very true, man. That is very true. All right, well, everybody, be blessed, be safe. Manico 64, rethinking a dollar. You know where I'm at. Enjoy your weekend. Be blessed, be safe. Back at next week. I'm sure we'll have a lot of things to cover. So see you guys later. Peace.